I have the distinct pleasure to introduce a couple of folks. And the fact, the first one I'm going to introduce to you, I'm always overly effusive about, so I'll leave it a little bit, succinct here today. Tim Seymour, CNBC host. Come on out here, pal. One of my favorite folks in the industry. Give Tim a round of applause, please.
Thank you.
Thank you. Thank you. And Jason Wild needs no introduction, but come on out, my friend, from JW Asset Management and TerrAscend. An exclusive interview from both of you guys today. I'll let you get to it.
Thank you. Patrick, thank you very much. And thanks, Benzinga, for getting us all back together in a room after a long time. And Benzinga has been charting the course in cannabis for a long time. And excited to speak with a industry visionary leader, a friend and a colleague, Jason Wild, at a time when I think the industry is going through, yet again, one of these moments that we're all both excited about. And, if you look at the screens and you look at the prices and you look at where assets are being priced, I think a lot of us believe there's a real dislocation between that. We don't have a ton of time today. And Jason, you wear a few hats. And I think it would be great for everyone to get first just some context on your background. And then we can dive in. But again, Jason, as both the chairman of TerrAscend, the CIO and founder of JW Asset, which is arguably one of the largest institutional investors in cannabis and has been from the early days. And also, we're excited to talk about a new initiative, which is the Weber Wild Fund, which is a social impact fund that is focused on minority entrepreneurs in the cannabis industry, partnered with Chris Weber. So we'll talk about that, Jay. But how'd we get here? How'd you go from pharmacist to hedge fund manager to cannabis maven?
So I'm originally, as you mentioned, I'm originally a pharmacist. I practiced pharmacy for about a year, but I was much more interested in the stock market and investing in pharmaceutical stocks as opposed to filling prescriptions. So I started a fund in 1998 with a whopping $80,000 under management.
It sounds like a Peter Lynch story.
Yes, he's one of my heroes. I have my Peter Lynch poster on my wall in my office at home. But so started the fund with $80,000 under management and just sort of slugged it out for a bunch of years. We were focused mostly on pharmaceutical investments. We actually started a private company back in 2010, which ended up becoming a big success and really sort of ballooning the size of my fund. And then around 2015 or 2016, got a call from a banker up in Canada raising money for one of these new medical cannabis companies.
How about that?
Yeah, I didn't know anything about that they had legalized cannabis up in Canada, but decided to take a trip up, see what it was all about, and I was just sort of I came out of there really excited. Heard about all the true medical uses for cannabis. First time I ever heard of CBD and that there were all these other cannabinoids. And I just, set out to try to meet as many companies as I could in the space. At first, we were only doing Canada because I was honestly worried about getting arrested running a fund here in New York.
Yeah.
Then we made a large investment into TerrAscend towards the end of 2017. We were still going along on the only Canada or non-US route. And then middle of 2018, John Boehner went on the board of Acreage. I was like, that's it. If they're going to arrest anybody, they're going to arrest John Boehner, not me. And we pivoted the fund into the US,
right?
And TerrAscend, and thank God we did, because it's been the US is a much more vibrant market where you can build a real business. Canada is very tough.
Well, I mean, the perspective of someone that's come at this from an investor's chair, but also someone that has pieced together assets and built companies, and I think that's where we want to go today, because there's been some there's obviously incredibly talented CEOs in this industry that are talking about kind of the bottom up and the operational. But I think your perspective is unique, and how you piece together TerrAscend. And I know TerrAscend is there's a limit to what we can talk about today on TerrAscend. You recently have there was a very exciting acquisition that you're in the process of closing on, and so my understanding is, based upon the regulatory framework, the circular is dropping soon, and
it dropped a couple of days ago.
So there's a limit to what you can talk about. But the context of looking at the industry real quick, I think from the chairman seat of TerrAscend, but also as an investor that's spent time investing in companies 5 years ago when we were all looking at, frankly, different metrics and multiples and dynamics and to where we are today. So really quick, because we're in the middle of S&P earnings season. I see we have 15 minutes already left, so let's keep chugging along. Jason and I, by the way, the last time we did a keynote at Benzinga in Chicago, we were sitting out in the hallway kind of going over, all right, should we talk about this? Should we talk about that? Suddenly, 3 people come running at us and like, your panel's already started, get on the stage. And so we, in fact, have to make sure that we keep things tight, told our folks here. But look, the concern around growth is something that, I always say on CNBC that high volatile and high risk asset classes are only going to trade as a function of the broader market scheme. And what's been frustrating for cannabis investors is that this has been, look, S&P and NASDAQ, despite some volatility for the last 6 weeks or 8 weeks, are near all-time highs. Cannabis is at 8-month lows. And yet earnings season for the S&P has certainly been an exciting last couple of days, shaking that industry, the markets out of a lethargy, worried about growth. Well, let's talk about growth in cannabis, because 3Q earnings are, around the corner. And a year ago, that was a major catalyst to this industry, along with federal dynamics, both from the November elections and the eventual Georgia runoff. Are you as concerned about growth as both the analyst community has been writing about this over the last couple of days, and just arguably the market that is priced in heavy discounting, sequential sales, which are down? And again, you sit at this as an operator and a chairman of one of the largest players in the industry. You're also an investor. What do you think about this concern around growth?
I think that if anybody, and I'm not speaking specifically about TerrAscend, but if you look at the headset data or any of the other data that tracks the industry, there was around the end of April, the growth, the sort of torrid sequential monthly growth that we had since the start of COVID started to level off. And that was because it should be sort of obvious to people, but it's people are going back outside. They're going to baseball games. They're going to restaurants. They're just leaving the house. And for the prior year and a half, people had been not going to work. They were staying home for during the day. They were not going out with friends or anything like that, and they had more time to consume cannabis. And now it's been a share of dollar issue. You just mentioned to me a few minutes ago that you own a bar downtown, and it's the busiest it's ever been, right? So I've
never seen consumption so pent up.
Yeah,
and I think that is a very relevant, at least anecdote here.
Absolutely. So, and a year ago, the bar wasn't even open, right? So I think that we should have all expected that there would be a little bit of a slowdown in growth. It's not that we still don't have huge growth rates year over year, but now this was sort of a special situation for the cannabis space. It certainly helped all of these companies over the prior year and a half, but we should have all expected that there would be a little bit of a slowdown in growth. I am personally as bullish as ever on the space. I don't think that there are any other sectors where you have stocks where you can get this growth rate at these multiples. I mean, it's sort of classic, like you mentioned earlier, Peter Lynch. Yeah, this is classic Peter Lynch growth at a reasonable price type investing. So I think overall, and the great thing is, so many of these companies in the space have been built through M&A, and the targets in terms of the private companies, they've gone down equally, if not more, on a multiple basis than the public companies. So there's really, as companies are looking at deals in the space right now to get into new states, these deals are not any more dilutive than they were 9 months ago when they were at much higher prices. In fact, there's another reason that multiples are going down on acquisitions, because there are all these states where, say on the East Coast, these very attractive states with low license caps.
You're capped, yeah.
So in a lot of these states, like Massachusetts, for example, there's barely any buyers left for sizable companies. So that's also, you don't have that same competitive tension in terms of for new buyers that are coming into the space. So anyway, back to your sort of your original question. This is what we experienced for the last year and a half is not normal. We had a step up in growth for the cannabis industry, and we are the normalized growth that we're all going to experience is still pretty awesome. It's still better than practically any other sector that I follow, and we still have all of these huge states on the East Coast that are about to go rec. New Jersey is going adult use. That'll be implemented in the next few months, hopefully. New York is in the next year and change. Pennsylvania, now they're starting to talk about that. So all of those things are going to drive substantial growth in the coming years.
Yeah, and the adult markets that are at least lauded as the ones where you're still getting pretty extraordinary growth are the examples of these states. Obviously, Michigan, Illinois, are the success stories. But then quickly, just on the dynamic around heavy discounting and margins. Because I think, this is the other dynamic. Companies can be cheap on yesterday's multiples. And look, they are cheap. As someone that's invested in a lot of growth markets, I spent my career investing in emerging markets where you've had hyper growth stories. This is a hyper growth story trading at, 11, 12 times 22 EBITDA, adjusted EBITDA, whatever that means. So, there is a caveat, right?
Yep.
But should we be concerned about this massive discounting as we read it back to, obviously, look, there's a ton of supply coming online. Everybody's reinvesting. There are, natural concerns inherent in the industry that this is still an ag industry that at some point pricing is going to be a lot more important, and this is why we need brands. So talk about that.
Sure. I mean, I think in terms of talking about heavy discounting, I think that's really, it's more of each state is pretty much its own country or its own market. There are some states where there is a good amount of discounting going on, and then there's other states where there's very little discounting. California, we had this, the illicit market. There was a huge bumper crop of product this year. That product is actually ends up going out to New York. It's in New York. It goes out to all the rest of the country. And that's another reason that a little bit of that torrid growth has slowed down. But my view personally is in whatever market you're in, first of all, you can still make very good money in all of these markets if you're an efficient operator and you are cultivating good, high quality flower, right? My personal view is that it's sort of the 20/80 rule applies to the cannabis industry. And the way it applies here is roughly 20% of the buyers are buying about 80% of the product. And those people are almost all connoisseurs of high-end indoor grown flower. And they're also connoisseurs of exclusive genetics, things like, cookies and some of the other, Connected, another brand out in California. So I think that where you can, the margins have been are so good for the scaled operators in this space that they can certainly afford to take lower prices and still be able to drive really good margins. But to me, the safest place to be in all of these markets is by growing and offering the highest quality product. The sort of the mid-range stuff and the lower end stuff, that's the stuff that's really going to get hurt by pricing, because at some point it's like, you can't sell it almost for any price, but the high quality stuff, you'll always be able to
We were joking yesterday about a company who will be nameless, who kind of boasts like, no, we're not trying to grow high-end flower. It's just, we're supposed to be middle of the road. And your comment was basically, that's the problem, because you're not trying to grow anything good.
Yeah, and in any consumer industry, you need to be obsessed with your customer and obsessed with always getting better and always, knowing that a year from now, customers are going to demand more than they're demanding right now. And I just think that a lot of these operators that are just sort of focused on selling a lot of stuff and being a little less focused on quality, that's fine for now when you have lots of new people coming into the industry as consumers, and they're not that picky, but they are all. It's amazing how well educated cannabis consumers get very quickly, because the bud tenders are so educated, and they're the ones that are really helping to drive that. And that's why I feel like you have to grow the best possible product that you can, because a lot of that other stuff is gonna become more commoditized. And if we ever do, and you know my view that we're not gonna have interstate commerce anytime soon, but if we do, that is also the safest place to be. There's not gonna be any advantage to growing high quality premium indoor flower in a warehouse in California and shipping it to New Jersey and Pennsylvania and the East Coast. So to me, those are the facilities that are worth building on the East Coast because they won't be sort of crowded out by cheaper biomass from the West Coast.
We've seen the industry develop along these lines, that high quality flower is going to have a place forever. I want to switch quickly. Our friends at Benzinga know I run a tight ship. I'm on a show called Fast Money. This is Fast Cannabis, and you know, you use the word obsessed to talk about high quality, and I want to talk about obsessed in the context of social equity and a project that you launched with Chris Webber, where I think the focus on social equity for everybody in this room and in this industry, it's extraordinary, it's appropriate, it's focused, and it's sincere. Talk quickly about the Webber Wild Impact Fund. We have 5 minutes left because this is an initiative that, for someone that's been so successful investing in the space as a hedge fund manager and then later putting a company together, your passion for this comes from, clearly led by the social equity component of what we all recognize is where the war of drugs has been disproportionately focused on certain groups, and that the world is waking up to the social benefits of cannabis. But it's also a great time to be investing alongside of this. But I want to hear about how this concept started quickly, how you met Chris Webber, how did this come together? He's as charismatic and you know, interesting and energetic off the court as he is on. He's an amazing guy.
Yeah, absolutely. So there was one of my investors is an active Michigan alumni. He introduced us. At first, Chris and I were just talking. He has some businesses that he started that are in the cannabis industry. He's a huge believer in the plant. We met over Zoom, did a few calls and really hit it off. And then we just sort of took it in the direct. We started talking about the war on drugs and how even me, I've been investing in the industry since 2015. I didn't know the whole how the war on drugs was really used as a tool to arrest as many people of color as possible over the years. I never knew that until more.
The wake-up call is something that I think is one of the fantastic parts about this movement, because people that thought they were in touch with social issues had no idea.
Yeah.
And here we are.
Yeah. So I didn't know that until like 2017 or 18. But once Chris and I started talking about it, we sort of had the idea, why don't we start an impact fund to invest in companies led by people of color? Because while you know, black people, I think, are arrested 4 times more than white, have been arrested 4 times more than white people for cannabis, they only make up like 2 or 3% of the state level legal licensees. And we decided that we wanted to try to have an impact on that and make a change.
Ooh, so the focus is now really on us. So how is this structured? Because again, this is fascinating. You know, on some level, there's not only capital that's required for minority entrepreneurs, and look, we're all struggling to find capital in this industry that's got federal restrictions, but obviously the minority community that much more, but also resources and just kind of the fundamental you know, kind of building blocks of a business that other successful businessmen can provide to you know, fledgling businesses.
Sure. So we set it up, and we've sort of iterated this a little bit over the last 6 months. I'm glad we didn't just come right out of the gates and launch it right away, because what we realized is well, first of all, through the fund that we set up, we are only, it's not charity. We are only investing in companies that we think are going to be sustainable, profitable businesses. But we also realized that there are a lot of things that we wanted to help accomplish that there wasn't really a capitalistic business model around. So we set up the Webber Wilds Foundation as well. And the foundation is geared towards doing things like helping with records expungement and job training and things like that, things that you can't really say we're going to be able to make money off of. So we've got the fund, and then we've got the foundation. And what we've learned is there are a lot of investors that want to invest in the fund because they think we're going to make money, which is great. There's other investors that want to invest because They feel like they can do well by doing good. They can help support the cause. They can make money and do something good and feel good about it. And then many of the other investors we've talked about, they want to do that, and they also wanted to make a donation to the foundation, which is the charitable side of the house. So we've just launched that fund. We're getting really good traction. And the thing that 4 months ago when we would all talk about it, and JK, who's a colleague of ours, our CFO, he said in the beginning, like, we shouldn't expect to make the same returns that we've made in the regular fund. Even if we did half of our normal returns, we should be happy.
I don't know. What's that?
Yeah, I was going to say, originally we thought we would be happy if we did, say 12, 13% a year, net returns. But the thing that, the way things have developed over the last three or 4 months is that, these states, especially the East Coast states, they're trying to like out social equity each other.
Yeah.
And there are actually better opportunities in a lot of ways in many of these businesses because of these programs than if it was just a regular the regular businesses that were invested in. So I've sort of in my head sort of raised guidance in terms of what I think that we can do from a return perspective. And on top of that, what has really excited me, and we have a really nice full pipeline of companies we're going to invest in, is these businesses that are run by people of color. They are actually, in my view, closer to the fabric of the cannabis industry and the cannabis culture.
They're finding the brands. They are more in touch on some level, and you are in touch, and we are out of time. So this has been, a great and very fast 20 minutes. Jason Wild, chairman of TerrAscend, CIO of JW Asset Management, founder of the Weber Wild, co-founder with Chris Weber of the Weber Wild Impact Fund. Benzinga, great day. Thank you very much.